Welcome everyone to our latest installment of the Borak series. So for today's episode, we are working in collaboration with Bersama Malaysia to talk about a little bit about REITs. And given that the market has been moving sideways for a while now, it would be a good sector for investors to look into to diversify their portfolios a bit. So to give us a little bit of color on the sector today, we have with us Ms. Farah Syifaa, our Maybank IB research go-to person for the real estate investment trust sector. Welcome on the show, Syifaa.
Good evening. Thank you, Sofea, for having me.
Yes, and thank you for being here also. We really appreciate you being here with us. So Syifaa, markets now has been moving in a sideways motion recently. This could mostly be due to investors' risk-off appetite, given that all of the uncertainties over the US interest rates, the global inflation risk, and also and also the potential US recession. But then, even during these troubled times, I believe that there are some defensive assets where investors can hope to take shelters in, right? So, just a quick one onto that. In your own view, would REITs be one of the defensive assets?
Okay. REITs can be a defensive investment asset class in nature, especially when other segments like growth stocks are losing its momentum. Other than a stable rental income stream, attractive distribution yields are among the benefits of investing in listed REITs. I believe the reopening of China's border will be a catalyst for the REIT industry, despite the anticipated global weakness and higher interest costs. REITs are now recovering, especially those with retail and hospitality assets. The traffic footfall and retail sales has improved to pre-COVID levels at most of malls, some even trading at above pre-COVID level. This mainly supported by the domestic travelers. We believe with this improvement in business performance, REITs will provide a better dividend yield and translate to higher returns for investors.
Right. So it's mainly due to like the increase in traveling, either it's domestic or foreign travelers, right?
Yep.
So now the dividends will help to pad the investor's portfolio even if the share price doesn't move, which is very, very interesting. So now on to the next question. Could you give us some of your top picks for the sector?
For my Sharia compliant top picks are Exist Rate and Al Salam Rate. We like Exist Rate due to its exposure in industrial space with bright prospects and stable track records of operating industrial portfolio. They are very active with new acquisition, which also supports its future growth. The dividend yield is slightly below average at 4.4% now. Meanwhile, for Al Salam REIT, we expect improvement from its retail asset of Komta JBCC in Johor in the absence of rental rebates coupled with higher traffic footfall from the Singaporean, which may help to boost its asset performance in second half this year onwards. Al Salam is now traded at a high dividend yield of about 7.7%.
Right, 7.7%. That's a good deal for our investors out there who are looking to invest in REITs. So maybe now we go off a little bit off the rail, since we're here talking about REITs, right? So probably you may want also to give us some color on conventional REITs as well.
So for conventional REITs, we prefer Pavilion REIT and YTL REIT. Pavilion REIT is largely backed by improved performance by Pavilion KL as it is located at a prime location. And for third quarter this year onwards, growth is also expected to come from its new assets of Pavilion Bukit Jalil, hence higher dividend yields onwards. As at end February, the committed tenancy at Pavilion Bukit Jalil was at 81.4%, where 75% of the space is now already open. Meanwhile, we also like YTL REIT due to strong dividend yield of about 8% and expect better earnings from the Australian hotels portfolio.
Right, that's very interesting on seeing how the REITs are doing and how it's going to be one of the assets that can help our investors to diversify their portfolio. Thank you so much, Syifaa. That was a very great analysis on the sector, and also a bit sorry for throwing you that curveball at the end of the session, because this session is supposed to be on iREITs, but I guess it's also best to cover a bit on conventional REITs just to get our audience the exposure on what are we covering on this topic.
Yeah, it's okay, sure.
All right. So before we sign off, would there be anything else that you would like to add on, Syifaa?
I think that's all from me.
All right. Thanks a lot, Syifaa, for your time. And all right, then, to everyone else, you can get our latest market news and research from our social media channels, which is our Telegram at Trade with Maybank, our LinkedIn account, and also our YouTube account. Or, well, you can also reach out to our digital team or our dealers to find out more about our services. Also, if you enjoyed today's copy session, do consider dropping us a like or even subscribing, and we'll see you at the next one. Till then, this is Sofea signing off. Thank you. Participate in Bursa Malaysia's Trade for Lebaran campaign and stand a chance to win up to 25,000 ringgit vouchers. You don't want to miss this chance. So, what are you waiting for? Trade in iREITs and IETFs today.
Do 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 do.